Welcome everyone to another session of TriTech University. My name is Bill Steppen, and today we're going to wrap up our month of in-depth inventory with taking a close look at how Lease Pool works. Now with Lease Pool, the idea is that you have some inventory that is typically meant for renting, either long-term or short-term. But the main idea there is that it's not actually for sale. You're going to keep it kind of a longer term. So normally when you buy inventory with the intent of selling it as fast as possible, hopefully within 3 to 6 months, if not faster, this is meant to be kept for 1, 2, 3, 5, 7, 10 years or so. And you're going to depreciate the cost value of that inventory over that time, primarily for tax purposes. Now, I'm going to go ahead and give my usual disclaimer that I am by no means a CPA. I'm not trained in anything to do with taxes or have a good understanding of the benefits of depreciation, but I'm certainly here to try and explain how it gets set up in AMSI. Anyone here would be able to help you through the setup of it within AMSI. But that's kind of my little disclaimer for here at the beginning of today's session. So real quick, as always, before we get too far in depth, we are using GoToWebinar, and you're going to have a GoToWebinar toolbar on your screen. Now on that toolbar, there is a questions box. So if at any point during today's session you have any questions on the content or the topic, feel free to go ahead and type that into the questions box, and I'm going to be doing my best to try and answer those throughout the course of the session. We'll have some time at the end for a Q&A, so if I didn't get a chance to answer it right away, I'll certainly do my best to answer it at the end. Now that being said, if that toolbar is taking up too much screen and it's blocking what I'm covering, there's a little orange button with a white arrow. Feel free to click on that, and that will shrink down that GoToWebinar toolbar off the screen so you can bring it right back with that same button, ask the question, shrink it back down, et cetera, et cetera. So everyone should be seeing my screen. Now, as I mentioned, this is the Lease Pool inventory. So it's primarily inventory, but this is kind of diving into a little bit of accounting related elements. So we're going to be looking at a setup that kind of looks at both factors. Now, if you're not, if you don't have the general ledger a module for your AMSI system, you're not going to be able to reap all of the benefits of this lease pool concept, but you would still be able to do searches by lease pool. There's going to be a little flag that we're going to be turning on at the serial level, so you'll be able to flag whether or not something is considered in lease pool or not. So that being said, let's go ahead and take a look at some of the initial setup. So if you're not familiar with Lease Pool, we do have a document available for it on our member portal. It's going to be in the documentation section, and it's going to be labeled, I believe it's simply called Lease Pool, either Lease Pool Inventory or Lease Pool Ledger, and it's basically going to go through this setup process. So we're going to look at some of this initial setup. It's going to be mostly ledger. So if we take a look into maintenance and ledger and system categories, in the system categories of AMSI, there's going to be a system category that is called lease pool references. It's going to be this system category 1695. Now, reading through this, I'll read it for you because it's probably a little small on screen. It says that this particular table is used by programs that switch inventory to lease pool assets. This can happen when inventory is received or when inventory is on contract for the first time. The switch only happens if your defaults are set properly. We'll talk about that as we go. The numbers should be in the following order. So I'm going to highlight them as we go. That's this first field here is inventory, so that's 120. And by the way, this is assuming that you're still using our default chart of accounts. So the first number here, this 120, is your inventory assets. Reference number 2 is going to be the lease pool inventory. Reference 3 is the cost of sales. Reference 4 is the cost of lease pool sales. Reference 5 is the merchandise sales, and reference 6 is lease pool sales. Now, just as a little heads up, again, if you're not familiar with ledger, the idea is when you receive inventory, the cost value of that goes into the 120 account, with that 0 as far as the ledger subnumber being replaced with the category number. So say, for example, if your category 1 is band and you receive $100 worth of cost value into the band category, that's going to put $120 value $100 value into 120-1. Now, when you sell that, it would then move out of 120 and go into 411, and then whatever you sold it for, excuse me, let's say if you sold it for $150 or $200, that value would go into the 412 account. Now, basically what we're doing is we're referencing where the fixed lease pool assets would be moving to. So when you flag that item as being lease pool, it's going to move out of 120 and into 151. If and when you do happen to sell that lease pool item, because at some point you're probably going to go ahead and cycle out or phase out your old lease pool inventory with a sale of some sort, that would move from 151 to 416, and then whatever you sold it for would go into the 417 account. So again, hopefully that makes sense. If you're not fluent in accounting speak, I do my best. Like I said, I'm not an accountant, but that's the basic gist of that whole setup. Dennis is asking, I looked in the member portal for the lease pool document you referenced, but there is no document in the portal with the word lease in the title. Then he goes on to say, sorry, ignore that. I found it under documents. He was looking under other files. So no problem there, Dennis. I appreciate you double checking my work there for me. But yeah, like he mentioned, and like I had said, it's going to be found in the documents section of the member portal. So hopefully that makes sense. Now, what this essentially means for you is that now if you're using AIM-SI kind of as it is out of the box, there might be some ledger numbers that you have to set up depending on what inventory you plan on putting into the lease pool. So while I'm keeping this up, I'm also going to go into maintenance and ledger, and I'm going to open up the chart of accounts. So here in the chart of accounts, as we mentioned, if we scroll down a little bit, and I'm not sure if I'm going to be able to make this any bigger. Let me see if there's a way that I can choose. No, I'm afraid I can't. I believe that in the GoToWebinar, I think there might be a zoom feature, so you could probably zoom into this screen if you need to. But as I scroll down here, you'll notice that there are these 120 accounts, so 120-1, 120-2, 120- etc. So that's where the cost value would normally go when it's received. And as we can see over here, it's saying that there should be a 151 where that would then move to when it's flagged as being into lease pool. So if we scroll down a little bit, you'll notice there is a 151-1, but all it simply says is lease pool for inventory category number 1. So essentially what this means for you is there's not going to be an existing set of these accounts for you to just make use of, because quite honestly, there's probably only a very few set of categories that you are going to be depreciating in this fashion. So it's just a matter of going in and setting up what these categories or what these ledger accounts are going to be named, and make sure that they're existing too. So you'll still at least have the 151-1, the 417-1, the 416-1. Since our category 1 is band, I'm just going to come in here and I'm going to say this is lease pool band. I'm basically just overriding that description, and I'm going to hit save. So that's the idea there. I'm not going to do that for the other ones just because hopefully that makes sense there. So again, you'll just want to make sure that if you are depreciating inventory in categories 2, 3, 4, any other categories, that you come in here and you add that. So you come in and you say add, and it would be ledger number 151, sub number 2, and then the description might be lease pool orchestra, depending on what whatever the name of the category is. And then the grouping is going to be depreciation. If I remember correctly. Yeah, so it's depreciation, and then we would save that. So just like you saw here, where that, or I guess that would be lease pool inventory, my apologies. So lease pool inventory. So while we're at it, let's just go ahead and look at those other ones. So we'll go down to the 417s, not the 471s, but the 417s. So that would be the cost of lease pool assets. So again, this one would be band, etc. We'll just take a look at the 416 as well. So 416, and that would be lease pool asset sales. And then we would do the same thing there. We'd make that be band. Hopefully that makes sense. Now, that being said, that actually does allude me to this other grouping for depreciation. Let's go ahead and back out of there and take a look back into these other ledger accounts. You may notice as you are perusing the existing chart of accounts that there are some other ledger accounts in here for land depreciation, building, leasehold, etc. And the main idea there is that if you are going to be tracking these other depreciations, you would be just making manual journal entries into those in some way, shape, or form. What we're talking about today specifically is the AMSI's automatic ability to depreciate inventory. So we're going to be focusing specifically on that, but there are some other elements here. And there's also a couple of other ledger accounts here that you'll see is depreciation lease pool and depreciation land, depreciation building. Now, again, I don't exactly follow 100% on the principles of depreciation, so I'm not the best resource for that. That would be your bookkeeper or CPA. But that does bring me to one other system category that you will want to be aware of. So back in the system categories, let's go ahead and do a filter for depreciation, DEPR. So you see there is another ledger, or excuse me, system category here called 1823. It's the depreciation / cost on contract inventory. And you'll notice that this is referencing that 165 that we just saw before. And then the main idea here, if I'm not mistaken, is that it would basically move the depreciated value into this 618-1 lease pool depreciation expense. As you can see down here, it says this table defines the ledger numbers to debit and credit when calculating the depreciation on lease pool assets. So that's basically the gist of how the ledger gets set up. Now let's take a look at how the schedules get set up, because as we mentioned, you might be depreciating your inventory for 2, 3, 5, 7, 10 years, whatever your bookkeeper is going to recommend for you. There's two types of depreciation that AMSI is going to track. There's book depreciation, which impacts your actual bookkeeping and general ledger, and then there's a tax depreciation. Now again, my understanding is that the book depreciation would be specifically how it's going to impact your books, and it's going to be based on accounting principles. The tax depreciation is based on how the IRS actually wants to see these numbers on your income tax return. Regardless, to set up these schedules, we're going to stay in maintenance, and then we're going to go to inventory, and you're going to find the function for depreciation schedules. And when you set up these depreciation schedules, there's not going to be any in here by default. You're going to essentially give it a name, and you're going to assign whether it's a book depreciation schedule or a tax depreciation schedule. You'll want to make sure that you have at least one of each. Now, if you're just getting started and you are in the music industry, and specifically if you are a client of Freeman Cannonberg, they have graciously provided us with a set of 3-year Macros tax tables. I'm going to click on those, and I'm going to load these in, and we're going to use this as our demonstration for today. So the main gist here, according to Daniel and Alan, again, as I recall, is that if you're starting to depreciate something within a certain month, you would give it one of these starting month book depreciation schedule, so January through December. You'll also notice that these are all specifically book, and then there is one at the end for tax. Now, if we go ahead and take a look at any one of these book schedules, we can go over to the second tab, the schedule details, and in the case of book schedules, the period is in a month pattern. So you're going to be depreciating your inventory on a month-by-month basis as far as your actual books are concerned. You'll notice that there's basically a set of numbers here. So there's a period anywhere from, in this case, since it is 3-year, 12, 24, 36, and I guess it actually is expanding into a 4th year. I don't know, again, exactly how this works, but the main idea here is that it's going to depreciate the percentage in that particular month. So whatever the cost value is of the item, it would depreciate, in this case, 2.78% in its first month, 2.78% in its second month, and you'll notice that that's kind of staying the same up until the next year, in which case it's depreciating 3.7% every month, then 1.23%, et cetera, et cetera, et cetera. Now you can create these manually. If you're going to create them manually, you would put in what period it is and then what the percentage is, and you would save that. And then you hit add and put in the next period, the percentage, and save. You'll notice when you hit add, basically it's going to ask for the period number, the percentage, and then you would save. Now, if you're doing like what we just saw there, where there's going to be a whole string of periods that have the same percentage, you could also use the add multiple function. So you could put in whatever the beginning and end periods are going to be. Let's say the beginning period of 1, end period of 12, and then the percentage of that 2.78% or whatever it's going to be. You would hit add multiple. And what you're going to notice when you do that is down here, there's this salvage percentage. So if you are salvaging a certain percentage of it at the end of this period, you're going to want to make sure that after you key in all of your percentages, the salvage percentage equals what you're expecting. In this instance, we're not expecting any percentage to be salvaged of cost value. So after the end of 48 months, in this particular instance, if we depreciate it using this particular schedule, after 48 months, the salvage percentage would be 0. It would be completely and fully depreciated. I'm just going to hit the cancel button because I didn't want to muck that up. You'll notice that if we take a look at the February period here, the percentages are a little bit different. So starting in the month of, or the first month, it's 3.03%, and then it actually moves to a different percentage in the 12th month. So again, the idea there is that in this case, you're starting in February, so it's going for 11. If we take a look at March, then you're going to see that we're going to basically see the percentage switch in the 11th period and go forward, et cetera, et cetera. And if we just kind of look down, you'll also notice, if I remember correctly, that we're kind of reducing the total number of periods. Again, I'm not a resource on the strategy behind it. I'm just kind of pointing this out so you can kind of see what to expect if you are planning on using these tables. Now, if we switch gears and take a look at the tax schedule, the one that comes provided to us with these tax tables, the period in this case is actually in years. So looking at this, we can see that there are just 4 periods. So the period 1, which would be basically the first year, it's going to get depreciated 33.33%. Second year would be depreciated 44.45%. Third year, 14.92, and fourth year, 7.30. So that's kind of the idea of how you set up the tables. Now, how do you assign these tables or these schedules to the inventory? There's one of kind of 2 or 3 different ways that you can go about doing that. First and foremost, if you have set up a particular item that in such a way that it's going to be depreciated essentially as soon as you receive it, when you're either setting up your inventory for the first time, or if you need to go back and change it, I'm going to do that. I'm going to go into, well, let's take a look at both. So let's say you're setting up a brand new inventory for the first time. You'd be going into Add Inventory. And when you're setting up the inventory for the first time, you'll notice that down here, there is this little checkbox that says lease pool, and then you would basically choose what is the tax depreciation schedule and what is the book depreciation schedule that it should make use of when you receive any item underneath this particular product. You'll want to make sure, of course, that it is set to be serialized. Otherwise, you're going to depreciate basically everything in that accessory pool. And then, quite honestly, I'm not even sure if accessories inventory would be depreciated in that process. But as long as it's serialized and you flag it as lease pool with the appropriate schedules, then the idea is as soon as you receive a serial number against this particular product, it's immediately going to have its in-service date essentially be the same as the date received. What's an in-service date? We'll talk about that in just a moment. So again, the idea here is that whatever this model number is, it needs to depreciate immediately. Your intention is not to sell these products new. Your intention is to have them on hand for that extended period of time. Now, if you need to edit an existing item, you would go into modules and inventory, add change inventory, and change inventory. You would look up the item in question. And then basically the same thing. So on that main tab, you would just go down, you would check mark lease pool, and then you would select the appropriate schedules for tax and book depreciation. Now, that's how you would do it if all the inventory in that model line, that product line, is supposed to be depreciated as soon as you receive it. If you're going to depreciate it the first time it goes onto a long-term contract, so usually some kind of rent-to-rent or rent-only contract, in your contract default setup, so maintenance contracts and add change contract defaults, if we take a look, let's say at the rent-to-rent default, what we can do is on the details tab, we could check mark the lease pool option, and then we can select the appropriate, again, book and tax depreciation schedules. And then again, the idea there is that, let's say you receive an item, it's a flute, it's a clarinet, it's a whatever, it doesn't go into lease pool immediately, because your intention is to sell it. But if you are going to put it onto a contract that you want it to depreciate based on the contract type, when you select the contract type, you can set it up so that it would go into lease pool essentially as the date of the contract. And then it would start depreciating from there. Now, if you don't necessarily want to have all items going onto the contract to go into lease pool, you could certainly turn that on and off at the time of keying in the contract. And in fact, when you're doing that, if you are figuring out that you need to change the book depreciation schedule, you can certainly do so both when you're receiving it and when you're putting it onto the contract. I'll show you how that works here too. So let's say we're doing a new contract, we're going into modules, contracts, enter new contract. We'll go ahead and pull up our good old friend Mike Anderson. If you're veterans to the webinars, you're probably familiar with him now. We'll select our rent-to-rent. We'll put in a flute onto contract here. So we'll just go ahead and make that selection. So now what you can do is if you do need to adjust the lease pool function, you can come over here to this third tab, this defaults tab, and what you'll be able to do is down, let's see, where did it go? There was a spot here for the lease pool function. Maybe it has moved. I'm going to come back to that because I thought I remembered it being there on the defaults tab. Maybe it has since moved from version 12 from version 11. So we'll come back to that, but you can always go back and actually make the adjustment back in add or change inventory. So if you do need to actually, this is a good point, if you need to make an adjustment on an item, let's say that you need to actually say that a particular serial is being depreciated and it didn't get received using a lease pool function and it didn't get put into lease pool at the time of keying in a contract. If we go back to the add change inventory screen, so we'll go ahead and we'll look up that flute again here just to bring it back up. So remember how we went to the 2SP and that got us to the main tab here. If we need to specify that a particular serial number is already being depreciated, we can come to the Serials tab and we can check mark that the serial number itself is in the lease pool. We can then select the appropriate tax and book depreciations. And the important thing here now is this in-service date over here to the right. The in-service date is essentially the date from which it will be calculated for depreciation. So if you say that the item needs to start depreciating as of, let's say, the first of the year, you would just want to make sure that you change the in-service date back to be 1/1 of whatever, or basically whatever it is that it needs to be depreciated as. So that would essentially then be month 1 or period 1 in the case of book depreciation, and in the case of tax depreciation, it's going to be based on that year. So hopefully, again, that makes sense. That is those are basically the 3 key things, or really the 4 key things if we're talking about the checkbox in as well. So that it's in lease pool, the appropriate book and tax depreciation schedules, and then the in-service date. So again, when you're receiving it underneath the model, if that is flagged as lease pool, it'll have the in-service date be specifically the same as the date received. If it's going into lease pool based on when it goes on to contract, then the in-service date would essentially be the same as the start of the contract. Hopefully that's making sense. If not, definitely let me know in the questions box. But now that all being said, where was I going with that thought process? It's a Friday and it's been a long week. So that's the main gist there. Now, I'm not going to save that, but there's something else that you're going to need to be cognizant of when you are getting started with depreciation. So the items are in lease pool, and now you're wanting to go ahead and start running that depreciation so that inventory can be depreciated going forward. Oh, I remember what I wanted to talk about now, short-term rentals. If you need the item to go onto depreciation the first time it goes into a short-term rental, there are actually some system variables relative to that. So let's go take a look at those. Maintenance, general maintenance, and system variables, if you're not familiar. Again, if you're veterans of this webinar series, you probably are. But let's look for STR, if I'm remembering correctly. Maybe it is ST rental, depreciation, lease pool. There we go, short-term lease. That's what I was looking for. So these 3 variables here determine whether or not something is going to be put into lease pool the first time it goes on to short-term rental. So the starting one is a short-term lease system variable. Yes or no to move serial inventory to lease pool once the item has been rented. The default is no. You could change it to a yes by making the value be a capital Y. You'll also want to make sure if you set that you set what the lease short-term lease book and short-term lease tax values are here. So basically it's going to say enter the book or tax depreciation description that should be assigned to serial inventory that is rented short-term. So you want to make sure that you know exactly what those depreciation names are. So back in your depreciation schedules, probably the easiest thing is to highlight, copy, and come back over here and paste that in. So you can right click and paste it in, and then that would use that particular schedule when something goes on to a short-term rental. Now, the other thing that I remember that I wanted to mention is that once an item moves into lease pool, it should never actually come back out of the lease pool. Again, I'm not the end-all be-all expert on why that is, but once it typically moves into fixed assets, forever should it stay, forever it will dominate your destiny until it ultimately sells. So that's the main gist there. So again, that's how that gets set up if we're talking about short-term rental inventory. So now we've talked about how items get into lease pool. How do they get depreciated? So on a monthly basis, you're going to want to come into, modules and inventory, and there's a depreciate inventory routine. So basically you would come in here and you would say that you'll notice that the last run is gonna, when you first start using it, it's gonna say 12/31 of 2000, and you're gonna come in and you're gonna give it basically the first date. Now, when you come in and try this, you're gonna notice that when you hit save, it's gonna say today's date must be within the month following the date last ran. So where is this last ran date coming from? That's another system variable. Back to system variables, and there is a date, last depreciation date. So you'll see that this has got that value in there. So what you're going to need to do is, based on essentially the first in-service date that you have, you want this to be 1 month prior to that. So if we are saying that we're going to depreciate our inventory starting in the month of January of this year, you would want this to be 12/31 of 2018. And then any inventory that has its lease pool, or excuse me, its in-service date of the 1st of January of 2019, it will start to get depreciated. And of course, if it's in the month of February or beyond, then it won't start depreciating until you catch up to it, if that makes sense. Now, I believe that technical support has a program that can be used to catch up inventory that is several months or even years behind. If you'll want to check in with them on that. The other way to kind of catch things up, so to speak, is if we look back in add or change inventory. So back to modules, inventory, add change, and not add inventory, but let's take a look at change inventory. So again, this is going to be specifically on the serial value. Let's look up that flute. You recall how on this serial tab you could check mark the lease pool and then select the depreciation schedules, put in the in-service date. If you know what the current and total depreciation values should be based on the current date. So regardless of the in-service date, whatever it should have been as far as like this currently depreciated cost value and the cost value depreciated to totality up to the current date, you can put in those two values there. If you do that for all of your lease pool assets that are now flagged as depreciating in service, then to get started going forward, you can essentially make that last run be the current date, or at least basically the date up to which this total value would be figured. I believe that these two values are included in the export of inventory out to Excel so that you could modify those numbers and bring them back in. If you're not familiar with that, back in modules and inventory, you have a utilities function, and you could run this inventory export import. You could essentially push inventory records out to Excel, make some adjustments, and then import those changes back in. There is another document back in that documentation folder of Member Portal. It's called Inventory Export Import. It discusses this routine and what is going to be exported, what can be changed, and what cannot be changed. So you're just going to want to review that article if you are planning on using this function to catch your inventory up as far as depreciated values. So if you don't know exactly what those numbers would be, my advice would be to, you can either, again, like I said, go in and set the last depreciation date to be essentially the very first in-service date that you have of your inventory, and then just run that depreciation cycle up to current. If we're talking about, let's say, a year and a half ago, that would be 18 months. It would be essentially 18 cycles. It shouldn't take too long, quite honestly. It would just be a matter of going in, running depreciate inventory, and let's say that this is 1/1 of 2001, and you'd basically then hit save. Yes, I know it's more than 12 months in the past. You'll see how that basically goes away. Then we go back to depreciate inventory, and now it's 1/1 of 01. Obviously, this is not what you'd want to do if we're talking about 19 years worth, but since most inventory is going to be usually no more than 5 years, hopefully all of your inventory that you have is not that old. So, and obviously if it is that old, then it's probably completely depreciated at this point. So your total depreciation would be whatever the salvage value is. If it's 0% and the item cost you $100, then the total depreciated value is $100. Making sense? Clear as mud? That's basically the way that depreciation works. And let me just check my my schedule here. We are going to learn how to establish the schedule, set up the lease pool, apply products, and regularly run the depreciation routine. This probably could have been a half an hour webinar. But I always set them to be 1 hour just because I like to have the wiggle room in case anything does come up. Let me make sure that everyone is open to questions, of course, and hopefully everyone here is familiar with that. I don't think there really was anything else kind of specific to depreciation. Let's talk about the reports. So at any time, if you need to see what these values are as far as the depreciation goes, in your reports and underneath the inventory reports, you will see that there is a series of depreciation specific reports that you can run. So specifically the book depreciation and the tax depreciation. There's also a lease pool assets report, the lease pool for property taxes that you could run. There's also the ability, as I kind of alluded to, if you're not using the actual ledger portion of MSI, but you still want to be able to easily search for inventory that's in lease pool, back in your inventory searches, so back to display inventory, for example, you'll notice that in the search selections here, there was an option here for specifically either lease pool or not. Maybe it was after you've searched. So let's see, up here, that's the discontinued functions. Quite honestly, I am not seeing that here in the version 12 display. So again, I'm going to table that and come back to that for now, but there should be a function for filtering whether or not you're looking for lease pool inventory specifically. There are also a number of reports in addition to that inventory depreciation reports. So we talked about, you could run book depreciation, tax depreciation, see exactly what those values are. In your current inventory reports, for example, the inventory count by category, there should be a function here for whether or not you're including lease pool. And again, I am batting 0 today. This is not good. I know that's why, because that does not look specifically at the actual serial numbers. If we take a look at the serial inventory report, there we go. So whether or not you want to include lease inventory, exclude lease inventory, or focus solely on lease inventory. So when you run your serial inventory report, you can use this to look up specifically the serial numbers that are either in or not in lease pool. There should be some other functions there. I'm 100% positive that those just might not have made the jump from version 11 to version 12 as far as things like the display inventory, and also back in the contract default tab there back when you're keying in contracts. So I'm going to look into those and probably get back to everyone via maybe like an email blast or something along those lines. So yeah, definitely check out if this is an interest for you. Look into your chart of accounts, look into those system categories, check out those documents that I mentioned, because having the ability to look up exactly what's in lease versus what's not in lease could be certainly helpful for your frontline employees as far as actually looking to see what you have available to sell and what should be held off for sale because they're meant for a rental. Check out those reports. Because those can be very helpful come tax time and making sure your financials are correct. Make sure you check with your CPA to see specifically what those depreciation schedules should be. And next month, we're going to be switching gears. We're wrapping up inventory here this month in March, and we're going to be looking at accounting specific webinars in the month of April. So starting April 8th, 10th, and 12th, that's Monday, Wednesday, and Friday of the second week of April, and then also the fourth week of April, the 22nd, 24th, and 26th, kind of keeping on to our typical schedule of Monday, Wednesday, Friday every other week. I don't have the webinar schedule 100% finalized as to what those webinars are actually going to be, but you can count on them all being something to do with accounting. So looking at things like how to get really into the nitty-gritty of journal entries, how to do things kind of advanced with your accounts payable functions, your accounts receivables, looking closer at the ledger subsidiary audit functions and things of that nature. There are a couple of questions coming in, so let me just make sure I get these answered as well as I can. Brett asks, if we use this in a firearm setting for rental guns, are there any differences that need to be done? Not really, Brett. You just want to make sure that it's all based on which categories are going to be depreciated. So if your guns, if I'm not mistaken, if you're using the default inventory categories of category 1 handgun, category 2 long gun, and you have some both handgun and long gun items that you're going to be depreciating, you just want to make sure you've got those 151, 1 and 2 accounts, those 416 and 417-1 and -2 accounts established, and then you just go in and you flag them as lease pool like we discussed. There's really no difference. Assuming that these are going to be done on a short-term rental basis, you're either going to want to make sure that the model number is checkmarked as being lease pool, so that when those items get brought in, they're going to go into lease pool, or if they're already received and you want to start depreciating them, to do what I said, go into the serial tab of the change inventory, put in the lease pool checkbox, select the appropriate schedules, backdate that in-service date, put in the current and the total depreciated values if you know them. Otherwise, you can play catch up like we mentioned. If that is the case. Now, if they are going to start depreciating as soon as they go onto that short-term rental, I'm assuming for something like going out to the range or something along those lines, you just want to make sure that those short-term lease and then lease book and lease tax system variables are also set up for you there. And then Brett goes on to ask also, did I miss it? Is there a I'm guessing you meant to say way. Is there a way to specify if lease pool items are for sale or not to be sold? Quite honestly, Brett, technically, lease pool inventory can be sold. There's really nothing that says it can't be, but when you are looking up inventory, and again, I'm going to look more into this because there should be a way for when you're displaying that inventory to not include lease inventory. So I'm going to look more into that, but that basically the idea there is that if you see it coming up as being in lease pool, your internal store policy may be to say, nope, these are not for sale. So apart from that, there's really not a way of specifying that they should not be sold, because technically lease pool can be sold at some point. It's just whether or not you want to. So hopefully that makes sense there, Brett. And like I said, I'm going to look more into those particular settings because I'm pretty sure they should be there, or maybe they've moved and I'm just forgetting where they moved to. So one way or the other, I'm going to follow up on all of that. Let's just see if there's any other questions coming in here. Brett is asking, I was thinking more along the lines of some guns I will sell to rotate them and some I need to keep in stock for at least a year. Okay, so so in other words, you have, let's say, 5 of the same model number, 2 of them you're going to rent and 3 you're having on sale. That probably would be kind of the specifically then going into the serial tab and check marking whether or not they're going to be in the lease pool or not. So you probably wouldn't have them set up at the model field, the model tab, the main tab, as far as whether they're going into lease pool or not, because it sounds like that is the case where you basically have multiples of that particular model line, but you're only going to keep some of them for rent. And then I would assume that, like you said, for at least a year or so after they've spent a year being rented in and out for the range, you'll probably sell them at a reduced cost, if that's the gist that I'm picking up there. And if that is the case, then obviously at some point you are going to want to rent them. It would just be, or excuse me, to sell them after they've been rented for a period of time. You're just going to need to kind of go in and look at the in-service date on those items to see exactly when they kind of started to be rented. You could also technically, if you don't want them to depreciate until they are renting, don't worry about setting up the lease pool specifically on the serial tab. Just go in and make sure that those 2 or 3 system variables are set up for the short term. And then the first time they are rented, they will automatically go into the lease pool. So then they would show up in that in those lease pool specific functions going forward. And then once they're in the lease pool, they really wouldn't ever come out unless you specifically went in and did that. And again, like I mentioned, I'm not the expert on that, but I believe they should stay in lease pool until they're sold at that point. So hopefully that makes sense. Actually, you're saying no, if I have 10 different guns in my pool and 2 of them I can sell and the other 8 I need to keep, is there a way to pop up a warning to not sell that particular serial number? Not that I'm aware of, Brett. You may want to check in with technical support just to see if there's anything that they're aware of, because they do answer a lot more questions than I do on a daily basis. But as far as my noggin is concerned, I don't believe there is any kind of warning as such, but that could be something that we could take a look at for you to see if that would be feasible to have. So yeah, definitely give support a call and check in with them on that. And they can always put a case in with development to look into that for you. Okay. So again, if there's more questions on that, Brett, definitely let me know. Let's see. Yep, you bet. Obviously, we're a little early because I got through the material faster than I expected to, in all honesty. But I'm not seeing any other questions coming in. If you do have a question, definitely say I have one. If you have a question but want to ask it to me directly, kind of offline, you can always email that to me at training@technologyforretailers.com. That's technology, the number 4, retailers, plural, all one word.com. And I'll be happy to try and answer that as best as I can there for you. If there's anything else I can do, just let me know. Like I said, we're going to come up with a whole new slew of accounting related webinars here in the next month. And then we're going to keep on rolling. These have been pretty well-received webinars. If there's anything that you would like me to look into, I know Dennis, you and I have chatted a little bit about the report wizard. I've been looking into that as best as I can here and there when I have the chance. So I'll be probably doing a webinar on that, not this coming month, but probably into May. So you can expect that to be at least one webinar regarding the report designer in the month of May. And so with that, since most everyone is kind of checked out at this point, I think we're going to go ahead and sign off. Thank you so much for attending, and we'll see you next month in April. Go ahead and make it a great day.